Hey, this is Tyler Davis with Go Home Mortgage here in downtown Fort Wayne. And today I wanted to take a few minutes to discuss with you some credit score magic. Really, if we know the rules of the game or the credit game that is, then we can always win. But we have to know the rules, and sometimes there's so much information out there that it can be hard to just go to Google and discover a certain topic. Some of the things like how much does having my credit pulled for a mortgage impact my score? How come on Credit Karma I'm seeing one thing versus when my lender pulls my credit, maybe they're seeing something different? So let's dive in and talk about a few of those aspects because really the end result is setting you up for properly pre-approved success. That way when you go to get pre-approved, the credit is not, it's not a question of I wonder what's going on with it. If you know the rules to the game, then you can strategize. So let's talk about that real quick. So here, there's different scores and score models used by different agencies or different consumer products. So for example, mortgages, we're going to pull Equifax, TransUnion, and Experian. And we're going to use the middle of those three scores under most cases. Now, mortgage companies are going to use different scoring models and auto insurance, bankruptcy attorneys, different things like that, they might use a different model. And then to make things even more crazy, Credit Karma, Capital One, some of those might only pull from, say, just Experian or just Equifax or just TransUnion, for example, to where they're not necessarily giving misleading information, but it's not going to be the exact same as what your lender pulls when they go to get you pre approved. So even though monitoring your credit is absolutely essential and recommended, that can be sometimes why it feels like almost like you're slighted, for lack of a better term. But it's not necessarily the wrong information. It's just we're all using a little bit different model. So another thing is to keep in mind what all goes into your FICO score, because your FICO score is really going to be that score that we are basing everything off of as far as interest rates, rates and fees, along with other things like loan to value and debt to income ratio. But credit score obviously plays a big role in that. So, what all makes up your FICO score? So, as you can see here on the chart, 35% of that is going to be payment history. Obviously, making your payments on time is going to be crucial. And then the next thing is going to be credit utilization or the amounts you owe. So keep in mind, like if you have a credit card with a $10,000 available balance, do you always have 9,000 of outstanding credit being utilized, or do you have 1,000 or less? That's something to keep in mind because the lower, yes, one of the rules of the game is they want you to use credit, but properly using credit is another big thing. So the amounts owed are way heavy, 30% of that. So 15% of that is going to be length of credit history. So have you had this auto loan for 3 months or have you had it for 5 years? Have you had that credit card for 6 years or have you had it for maybe 6 months? The length of credit is going to indicate to the underwriter your history. And obviously, the longer history you have, the better indication of how you utilize and manage your credit. So another thing is going to be the types of credit use. So it's 10% of that, and then new credit. Did you just open that credit? How often are you having inquiries pulled to open new lines of credit? So as we keep moving here, I mean, Experian Boost is definitely it's something that we're starting to see more and more of, and it's a great way to take advantage of. But again, that could only affect the Experian score. And then, as we mentioned before, there is Equifax and TransUnion. So it's self-reporting accounts. So think like utilities, your phone bill, gas bill, car insurance, things like that. And though it will help to boost that score, it's not going to weigh as much on the underwriting side as like an auto loan, student loans, credit cards, things of that nature. So another thing, like secret sauce, as far as the rules of the game. So, what are some of these things that you can do to set yourself up for success? So, kind of the magic number of bank cards or debit card, credit cards is going to be three. So, at least three open trade lines with credit cards revolving, showing that you are using the credit and managing the credit correctly. And then number of inquiries in the last month or so. Zero is going to be the best, obviously, but every now and then you're going to need to have it. But two or more is going to weigh the heaviest on you. And then number of months on file. So how long have you had that open account? The magic number that's going to get you the best bang for your buck or the highest return is going to be 48 months or more. So another thing to keep in mind is, like, if you want to eliminate a credit card, pay it down to zero but leave it open, because all of that past history continues to report on. So it's going to be a strength. Let it go to zero, pay it down to zero, but don't close it. Leave it open and let it ride, because leaving that is going to have extended history. And then number of months since the most recent derogatory public record. So did you maybe have a collection, or did you maybe have a lien, bankruptcy, or something like that? Obviously, no public record is going to get you the highest return on that score. But as time passes, as you'll see on that chart, 2 years or more is when you start to see things really start to bounce back and get some return for that. But obviously, no public record is going to be the best. Now, this is one of the things that I thought was super interesting myself. So as you can see here, damage points. So let's say you have a mishap on your credit or a negative event. The interesting thing is, the higher your score, the more it impacts you. So keep that in mind. So really, really manage that. So on this chart, you'll see, for example, there's two charts. One is if your score is 680. The other is if your score is 780. So as you can see, if you have that card maxed out, like we used in the previous example, if you have a 680 score, it's going to bring you down 10 to 30 points. But if your score is 780, it's going to bring you down 25 to 45. If you have a 30-day late payment, as you can see on there, up to 110 points, that's going to bring your score down. So these days, auto pay is just, it's so out of sight, out of mind. I mean, if you know your account is going to have the money in there, put it in there. So a debt settlement, when you pay off a collection, and this is why consulting a credit professional is super important, because a lot of times we think we need to just go pay off those collections accounts, but that's not necessarily always the best strategy to boost the score, because when you settle that, it's going to take that history, whether it was 3 years ago, and bring it up current. So it will have a negative impact initially. Foreclosure obviously is going to impact you quite a bit, as well as a bankruptcy. So the higher the score, the larger it's going to impact you. So collections, I mean, they're going to remain for 7 years from the date of the initial missed payment that led to the collections. So charge-off accounts. Now this one again is sort of tricky. So I used to think a charge-off meant that the creditor just wrote that off, that they're not going to get that. It's not necessarily the case. You do still owe that money. They just haven't turned you into collections. So those are also going to remain 7 years from the initial date of that missed payment. So again, consulting a credit strategist or credit repair type service can be beneficial before you go throwing money at paying off all these collections and things. Closed accounts, they're no longer available for further use, but even if they have a zero balance, if it's shown on collection, it's still going to be a collection, even with a zero balance, until that is removed from your report. So if you lose a card, it's still going to report on there, but as long as you get it taken care of and get things shut down pretty quick, then as long as there's no delinquent payments on there, again, this is why it's so important to stay on top of our credit. Pull that once a year free credit report. Bankruptcies, Chapter 7, 11, and 12 remain for 10 years from the date that it's filed. Chapter 13 remains for 7 years from the filing date. And then as far as the mortgage side goes, what we do is the waiting period is from the discharge date. So not the date that the bankruptcy is filed, it's from the date that it is discharged. So for example, FHA is 2 years, conventional 4 years. So it's the discharge date that's gonna be what you really want to watch for. So there have been identity theft breaches and things in the past. There have been different ones. I'm sure you've been aware of some of these, but again, that's another reason why it's so important to stay on top and manage your credit. So you can also take advantage of these resources here on the screen for Equifax, TransUnion, or Experian to freeze your credit. Just note that when you go to have your lender pull your credit, you will need to contact those and remove that freeze, even if it's for a short time, to allow the lender to pull that full credit report. Credit bureau information is located on here. Most of those will allow you tons of resources. Just going on their websites. You can always call them. Their website, though, is a great resource to have. Other helpful credit websites that you can opt out of pre-screened calls. You can go on the do not call list, my FICO, tons of different stuff on there to, again, if you know the rules and you're watching it, you can win the game every single time. So again, I appreciate your time. Thanks for taking time to watch this. And really the ideal situation is for you to set yourself up for success. But knowing the rules of the credit game and that credit score magic is how you do that. If you'd ever like to have a more in-depth conversation about your pre-approval options to get you properly pre-approved or how to best strategize with credit, I can always be reached at 260-438-9414, or you can email me at tyler@gohomeloans.com.